Good morning, everybody. This is Mark, and we're back here for, it's Tuesday, and we're back here for T3 Live. So, yesterday, significant move happened, obviously, in the S&Ps, almost from pre-market, overnight, almost a 40-point, move in the S&Ps, about a 200-point move across the board in the S&Ps, and you have about, you had a big reversal that significant in the sense that it means we're not ready to break out and we're not ready really to go much higher. We need some digestion, we need some back and filling that's going to happen, that I expect to happen over the next few weeks heading into earnings season. That would really complete the head and shoulders pattern and the right part of the shoulder. So with that being the case, that means a lot of the stocks that we were just in and involved with have now come back to that first day breakout point. The key is, do they make a higher low, or do they continue to go lower? And do we just retrace further down? Is 1250 still in the cards? We have the 200-day right now at 129 across the board roughly. So that is my first stop. Is it a little bit back and filling that's happening? We'll have to wait and see. I think one of the keys that sort of triggered this market, along with the banks, which really found no life right at the open, was Apple. Apple had a news conference. Everybody was expecting to have Apple TV all over the board. Tim Cook was going to be talking about it. Never happened. That being the case, it came right back to where it was on Friday, roughly around 11 o'clock. That just means if you were in a swing, I think it's still okay for the time being, but skeptical at that. From a day trade point of view, it should have been out of your account. And I talked about it. I got caught a little bit, but that's part of the game. I had conviction. If I would have said, based on what I saw Sunday night, I would be able to get a chance to buy Apple again at 580. I would be doing it 10 times out of 10, and that's how you have to trade this market. At this point in time, you got to let it play itself out. It doesn't seem like it's ready yet to go off to the 600, 620 level. It will do it in time. It's still showing leadership along with Amazon and a few other selective plays, but with that being the case, you gotta respect the market and respect the tape of what's happening. We have the Greece elections coming up next week. That's really the overhang at this point in time. A few selective stocks we should be looking at this morning. I would say Coors is in the cards. Had good earnings. It's up to 43 level. It looks like holds above 43. It looks like 45 to 47 is back in the cards. It's going to resume its uptrend. The big boys that I keep looking at on pullbacks are, the price lines, the CMGs, some mid-cap stocks, SXCI. So right now we're not in a place where I'm comfortable putting anything on in the swing account, but at the same time, I do think we're in that tape where let the market do a little back and fill in, which means maybe a test the 200-day in the S&Ps, which is roughly, or in the spiders, around 129. That being the case, I'd probably be looking for stocks to make higher lows across the board, which I think is what's going to happen. Casinos are something that I'm going to be watching. LVS, I want to see if it makes a higher low, and a few other plays. Even the clouds, CRM's back to its 200-day, I believe, and it's right at the 130 level, and I want to see if it holds there. If it does not hold there, then you're going to be looking to go lower. The one thing I don't like about the CRM and some of these others is the flat 200-day, which means that they could be doing a whole lot of nothing for a period of time. That being the case, we're at the period in the year where, being quick and being nimble is certainly the way to really make money. And I don't think we're going anywhere fast, but at the same time, I think volatility is going to continue to increase with this uncertainty across the pond. And with that being the case, you just have to know your levels, respect your stops, and respect your targets, and go from there. Good luck today.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.